Hey, everybody, Chris and Tim back with you for another thrilling episode of Leading by the Book. We're going to start this week with a little bit of a different topic than usual. Our very own Tim Barrett has purchased an RV. And by RV, I'm thinking of Christmas Vacation when Cousin Eddie says, "That there is an RV."
That there is an RV. That's right. I bought a travel trailer, hoping to do a little bit of a road trip. My wife, not to make everything that I talk about investing, but I tell my wife anytime I buy camping equipment, this RV, all that stuff, I say it's an investment in the recession. Because if you think about it, like camping is actually a very inexpensive vacation, right? So I call stuff like that actually domestic investment. That's what I call it.
You could also call
Well,
it downside protection. If
that's
everything
right.
else goes to hell in a handbasket, I got my bug out vehicle. We're going to go out in the middle of the desert and nobody can touch us.
I can go live in a van down by the river.
That has been your entire goal since I've known you.
Oh, it's all just various forms of ability to live in a van down by the river. That's right.
Are you a runner? And I don't mean like the physical fitness aspect of running, but like, are you a runner? Like you just want to run away sometimes?
Um, my wife does say that I'm frequently planning my escape by land and sea. Those are her words.
So when it's fight or flight, your flight.
Um, I'm very much so I am a 9 on the Enneagram, which is the peacemaker, and nines are actually very known to have a deep connection to nature. I enjoy the quiet and solitude of being out, in the forest or being out on a sailboat or, away from sort of the pressures and chaos of, this rat race world that we live in.
What's sort of the problem with the camping thing now is I think everybody else is in the same boat you are. And so you're telling me, because I'm not a very big camper, but I would like to do it a lot more. And, especially given the state that we live in, it's an incredible state to camp in. But, where you go camp, you said it's more full than it's ever been just because
Oh, it's
everybody's
crazy.
out there.
Yeah, it's totally crazy. Um, just about everywhere I've gone, there if it's reasonably easy to get there with a stock SUV, it's packed, completely packed.
I don't think you have a stock SUV though. We got to walk through this. Your bug out vehicle, in addition to the trailer that you have created, is fairly remarkable.
Yes, so yes, I also bought a very old uh, Lexus LX470. It's a basically the Land Cruiser version of the Lexus version of a Land Cruiser, I should say. And yeah, I have that built to sort of make it over a few what they call gatekeepers in order to not because I love rock crawling or four-wheel driving or anything like that. Actually, I actually really I don't love rough roads. It's just exhausting to drive on. Um, but it's for that purpose to be able to kind of get out a little bit in the middle of nowhere, get some space, and you know, grill a steak, have a campfire, hang out with the family.
There's something absolutely magical about a campfire.
It's very much the simple things in life that I think are valuable. I also I know that one of my core values, which this will not surprise you, uh, working together every day, but one of my core values that I deeply, deeply, deeply value, and frankly, sort of need, is freedom. And so I think a lot about, I've never been a very good employee, but I if I can toot my own horn, I think I am a pretty good uh, manager, executive, entrepreneur because I'm constantly trying to work my way out of a job so that I can get freedom. And we were just recording a little show for our team and talking about training, and that just resonated so much with me because, if you can replicate the valuable things that you do in somebody else, not only is it fulfilling because you got to mentor them and raise them up in their skill set, but for a guy like me that values freedom, you get that freedom.
I think training is an interesting concept, and especially right now in the economic environment that we're in. Part of the problem that we have when we see organizations get bloated, I actually think relates back to training or lack thereof. The problem, and also the strength of training and training programs, are that they make us explore exactly what it is we want, exactly what a role should do, exactly what needs to be done. And like a lot of things, we very much struggle to get down to detailed enough thoughts in our heads. And we go and we hire somebody hoping that, hopefully they can just come solve this problem for us. We know we have a problem. We don't necessarily or haven't necessarily taken the time to solve it or to figure out how it should be solved. So we hire somebody to do it. And then they maybe do a good job at it, but not a great job. So we hire somebody else, and then we hire somebody else. It gets us back to this idea that we have been probably very overstaffed as a country at the corporate level here. And I think that's going to be a scary thing moving forward. I'm sure I've made the same point the last 3 or 4 weeks here, but so much of what we're seeing now is going to cause companies to reevaluate how they're doing things, how they're working. Do they need big office spaces? Do they need lots of office spaces? And the same thing goes with people. Do they need all of these people? Or if we actually take the time to create training and detailed roadmaps for our people, do we actually need to hire these people back, or can we be just as good or maybe even better without doing it?
Right. What is that? Desperation is the mother of innovation, or
I thought it was necessity.
Necessity is the mother of innovation. Yes, and when you get into times like this, when your business is struggling because of some global pandemic, vampire apocalypse, alien invasion, whatever it is that causes impact to your business, that causes you to look at the resources that you have and say, I have to do whatever I'm doing more efficiently, or risk being out of business. It causes us to go back and say, how are we doing this thing, and can we do this thing a bit better? And you become more efficient, right? And over time, productivity in a country or a business is what really drives value. And so these times when you're pressed, when you don't have excess cash flows to make the investments that you think you need to make to improve the value of the business, you're forced to do things more efficiently, to do more with less. It makes businesses better, I think. I also think that one of the mistakes we make in hiring is a mistake that most of us make in life in general. If you don't know what you want, there isn't anyone in the world that can tell you how to get it.
Yes.
And so if you're going to hire somebody and you're not clear about what you want, then they're not going to be clear about what their deliverable is. And, I really like the concept of talk rating. They talk about it in the book called Who. Talk rating is basically a concept of starting with the end in mind. You're writing the person's 1-year review and thinking through, what are the measures by which success is going to be defined, and how am I going to measure this person's success?
Mm-hmm.
And then you're backing into, what does that mean, the skill set this person needs to have? And then you're backing into the job description, rather than working the other way, where we write a job description because we think we need somebody to do something. I think that's a mistake that gets made in hiring, frankly, and in life. It's just not knowing what you want.
Well, we just start filling holes, or we start doing things because we think we're supposed to. We think we're supposed to have this person on our team, or this role on our team, or we think we're supposed to buy this thing, or whatever it is. I think we were talking about it yesterday, but The primary function of a CEO, and by the way, don't attribute this to me because I completely lifted it from one of my favorite people, Charlie Munger, but the primary function is capital allocation. And I've been thinking a lot about this more in the context of something that Ben Horowitz wrote about, which was the difference between peacetime CEOs, as he calls them, and wartime CEOs. And right now, you're seeing a lot of CEOs that were peacetime CEOs for the last 10 years. And what I mean by peacetime is there wasn't a lot going on from a broad economic perspective that really would limit their business. Most businesses, at least let's say publicly traded businesses, weren't really in survival fights. I mean, certainly there are businesses in survival fights, even in bull markets. You have startups and things like that. But most folks have been peacetime CEOs for a long time. Even a guy that I love, Bob Iger at Disney, has been a relative peacetime CEO. Suddenly, you're seeing a lot of CEOs, well, just about all CEOs, thrust into this idea of being a wartime CEO, meaning you are now fighting for survival of your company, not just against the marketplace, not just in the eyes of your customers, not just against your competitors, but literally in the sense that you've got governments trying to shut you down. We are in a black swan event where a lot of companies are trying to survive things that were never even remotely foreseen. And the skill sets that it takes to lead in those environments are dramatically different. And so the question, and I'm actually curious what you think about this. The question is, can you be both a peacetime CEO and a wartime CEO or not? Because I think people might differ in terms of how they would answer that.
I think that the peacetime CEO knows that the wartime is coming, and is preparing the company for stability. I wrote about this a little bit in my blog that I like to pontificate on, which actually, as I think I told you, I realized I bought the secured the rights to timsblog.com, which actually is not accurate. It's actually timsblogs.com. But I decided that plural is actually just fine, so I'm just going to leave it.
To be fair, there are multiple blog posts, so it is Tim's blogs.
Yeah.
That's fair.
Yeah. I'm just going to go with it. But I'd written about inefficient efficiencies, and I feel like as American business owners and operators, and we've looked, and investors, frankly, it encompasses all of them. We've looked at our companies, and we've said, how do we do things more efficiently? And a lot of that has all been driven at reducing inventories and working capital, reducing manufacturing costs by outsourcing to the lowest cost manufacturer. And I think a lot of these things are actually being called into question right now. Does it make sense for companies to produce their goods in a foreign country, a world away, when that supply chain can actually be fractured very easily, as it's just been proven? Like, that calls into question that whole most efficient producer thing. We've taken our inventory levels, right, and reduced them to this quote unquote just-in-time inventory, and that's left shelves bare in many cases, right? Again, because the products are actually manufactured a world away. Both of those things have been decisions made by peacetime CEOs and business operators. Our working capital that we hold inside of a company gets reduced, and it is in fact a positive thing to have a negative working capital business. People brag about this, that they can have a negative working capital position. That's actually an attractive thing about a car wash company. Unless your business gets shut down in some way. And it's got me thinking a lot about my wife's grandfather. who he and her grandmother started a machine shop. They were depression babies, and you built businesses differently during that time. You built businesses to survive a downturn. Even our use of debt, right? So all of these things are peacetime CEO decisions. We maximize the amount of debt to reduce the amount of equity that we need to give away. But all of these things leave us in a really compromised position. And so how efficient are those inefficiencies? They're is really cause a lot of these things into question. How are lenders going to underwrite us coming out of this? Are they going to require us to have working capital reserves? Probably should. Is it a good thing to be the low cost producer if your supply chain is heavily dependent on foreign countries and foreign actors, and that can be disrupted? Is it efficient to reduce your inventory levels to such a point to where you actually only have maybe a week worth of inventory? And in that sense, even the businesses, these peacetime CEOs, and I'm guilty too, because nothing like this has really happened, but these peacetime CEOs make these decisions and they're rewarded for it. The stock price goes up, the valuation of the company goes up. And I think we may be coming into a world where we are going to be rewarded for building a sustainable company again.
By the way, activist investing plays a role in this too. We should point that out. Right. That plays a really, really big role in some of these companies effectively shrinking their working capital so they can buy back stock. You build up the share price, or you grow the share price. Investors happy, CEO is probably happy as well. There is a problem with that, but and to be fair to a lot of these CEOs now, this is unprecedented in the sense that a government is actually shutting us down. That was certainly nothing that any of us probably ever considered. But to your earlier point, we do need to learn from history, just in the sense that the unforeseen can happen, and it's kind of like we're preparing, but we don't know what we're preparing for. I actually think about this a lot when I don't want to get out of bed and work out in the morning. I'm thinking, all right, well, I'm preparing for a fight here. I don't know what that fight's going to be. I want to get myself healthy because I might be fighting cancer down the road, or I might have any number of health issues, but I'm preparing myself for a fight. I don't know what that fight's going to be, but that doesn't change the way I prepare. And I think as a business, we get caught in this fallacy of, oh, well, and we do personally too, to be fair. Well, things are going well. The market's going well right now, so why not? And I admit, my wife and I had a conversation about a year and a half ago on something we were going to invest, and we were debating if we should put money over here or put money over there, and we said, all right, well, we've over the last couple of years over in this account, we've been doing 30-35%. Why don't we just put it there? Well, just because it's done that in the past is in no way indicative of what's going to happen in the future. It's the hot hand fallacy. We a lot of people have talked about this over the years, but just because some guys made 9 threes in a row, it has absolutely no bearing on whether or not he's going to make the next one. And so, we get caught up in these we're only 12 years out of, I guess maybe 11 years out of the financial crisis, but it's still so easy to forget the lessons that we learned, even though they're, I guess, slightly different lessons. We got to be preparing for something. And that's why I think wartime CEOs can be peacetime CEOs. I don't think peacetime CEOs can be wartime CEOs, because even in peacetime, that wartime CEO is building up for the unknown. He's preparing, and the unknown is going to happen. We don't know what it's going to be, but something unknown will happen, and we're always preparing for that.
Yeah, that's always the point. And it's funny. We as humans, we like trends, and we project out trends, and we think they're going to continue forever. They never continue forever, right? The trend always changes.
But it's only when it's in our favor that we say that, though. Like, yeah, if the market's up 30%, it's going to keep going great. But if it's down 30%, it's like, well, this isn't going to continue forever. Well, we're so dumb. We tell ourselves what we want to hear.
Right.
How are we at the point in the food chain that we are? Like, you and I got in a big debate the other day. Well, not a debate, but a big discussion about apex predators, if I recall. And I just, like, human beings are so smart, yet so stupid.
Right.
And it's embarrassing. It really is. But that is why I read a lot of books about war, because there's so much to be learned about these operators that operate in the most dire of circumstances or in the highest stakes of environments. And taking that and preparing your company in peacetime for that can only do good.
Right. You know what's interesting? Just through this discussion, I'm discovering something about you here.
Oh boy.
Your entire discussion there was about fight, and we just talked about my response of flight. And I'm a recovering debt underwriter, and so I'm typically analytical to begin with. And my son does this too in sports. He loves playing sports. Very athletic kid, but we always say he lacks the killer instinct. Because he's like me, he's analytical. First step is step back, assess. Where's the risk? How do I insulate against that risk? And so I think that's why I like the withdraw, the ability to think, to get away, to think, to clear everything, and to look and see, okay, what does the playing field look like? And then to act.
See, I think that's the first step, whether you fight or flight.
Well, I just was about to say I appreciate having you on the team because you're ready for battle at any given time. The fight and the flight need each other.
I think they do, because it's neither right nor wrong. And I think in the right circumstance, each of them has merits. If I'm on a bus late at night and 6 guys get on, ready to beat me up, I think flight is going to do a lot better for me than flight in that. No matter what Mark Wahlberg or Jason Statham manages to do in a movie, you're not taking down 6 guys that are coming to punch your lights out. It ain't going to happen. Flight is very, very, very good. But there are also plenty of circumstances that are uncomfortable that we want to run away from. Here's one. Say you're firing an employee. Uncomfortable. A lot of people run away from it. They hope the problem solves itself. Not going to. That's when we need to fight through.
Right.
It's just a tool. They're both tools. I think we become comfortable with tools. Someone might like a hammer, someone might like a screwdriver, but that doesn't mean we should favor one over the other. We should find the right tool for the job.
Yeah. No, that's right. That's right.
I do think, getting back to the CEO topic though, I don't think there are many good CEOs. And part of the reason that I think that is, one, we have too many peacetime CEOs, to be honest. And 2, it's very hard to get the right level of training, not only to be a CEO, but to be a wartime CEO.
Sure.
It may be one of the reasons, and I would consider myself a better probably wartime leader than peacetime leader. I'm not a good visionary guy and stuff like that, and that's what a lot of peacetime CEOs do well. They think about the future, and they're able to cast a vision and all that. But I think probably part of it is because my formative years were spent in a very distressed company at Sears, and I think because of that, I gravitate towards what I'm comfortable with. But that also fortuitously has prepared me even for things now. And while the circumstances, our car wash company was in were not nearly as dire as things I saw at Sears, the market was certainly in a dire situation, and that very, very much prepared me well to handle that kind of stress. In fact, I loved it. I think I said this yesterday morning in our men's group meeting, but the happiest I've been since I've been with the car wash company was the last couple months when we've been dealing with some of these existential issues. I felt alive. But I don't think many of the CEOs right now, at least in the public markets, are prepared for something like this. They've had the benefit of 12 years of pretty calm seas, and it's really tough. And part of the reason it's tough to become a wartime CEO is because, say you take over a distressed company, the chances of survival are very, very slim typically. And so that company goes down. You've probably taken an unfair um, bit of artillery to your resume in that regard, and you're probably not going to be looked on very favorably for these other CEO jobs as a result of it, even though it might not have had anything to do with you. So getting the experience that you need to lead in situations like this is really, really hard to come by.
Yeah, I mean, it's got to be gained on the job, really. I mean, you can't. I suppose you can study case studies, but studying case studies doesn't ever actually give you that gut check that really going through difficult times does.
Yeah, yeah. Go watch 100 hours of UFC and then go get in the ring and tell me if that prepared you for it.
Yeah, exactly. Yeah, no, that's actually that's funny. That's actually a really good example. That's actually a really good example. There's there's been experience in my life, as I mentioned. I'm a recovering debt underwriter, where I watched a lot of a lot of folks go through difficult times with their banks, right? And so I'm actually very experienced in seeing what that's like. But going through a time like this, especially when this first started, we didn't know if we were going to be able to stay open or not, right? And so if you have no revenue, you very quickly look at, okay, what's my cash burn? When do I run out? And you get that gut check of, am I going to survive this or not? And during that time, even all the experience that I had watching others do it, go through it, navigate it well, I saw a lot of people navigate it poorly. This is going back to 2008. I worked for a bank. I started a week before Lehman Brothers failed. And yeah,
timed that one well.
Yeah. I was there for about 5 years. It was a very interesting time. But even seeing that didn't prepare me for actually experiencing that during that short period when we weren't sure. You have no revenue. You're looking at, oh wow, I have no revenue. I still have bills, expenses, operating costs, payroll, benefits to pay. You very much look at that cash burn, and it's like looking over a cliff.
Yeah, it's a gut check.
It is.
But until you experience the emotions with it, okay. This stuff also to your.
That's exactly what it is. What it is. It's the emotions.
Yeah, until you it's one thing to read it on paper, but until you feel that surge of adrenaline or that anxiety in the pit of your stomach, or just even that crippling and heavy despair that weighs on you, especially as a CEO, and you've got employees and families and all that stuff that you look to. You can't be prepared for that. And I'm curious to see if there's a way to study the companies that do well in this. Obviously, there's going to be some market tailwinds if you're a stay-at-home product or things like that. But what is the prior experience like for a lot of these CEOs? I talked about Bob Iger. I love Bob Iger. I think Bob Iger is, I always say Bob Iger's the best CEO in the world, but I'm not sure if Bob has ever been tried like he's going to be. And I guess, I don't know if he's officially the CEO again at Disney. I know he kind of left and then he's like, oh, can't leave right now. But I'm not sure that there's ever been a crisis like this at the Disney company. And I think if anybody can handle something like that for the first time, it's Bob. But I'm curious what that's going to be like. You get a guy, he's the most polished CEO in the world, and he's effectively navigating something like this for the first time. Those are things that it's hard to price into the market. And I don't know how you do, but I also, just like last week, I don't understand how the market is priced where it's at right now. There's a hell of a lot of optimism. And, the guy that I love, you sent out the article interviewing him, Sam Zell, this week, and he certainly doesn't see a lot of optimism. And I think I definitely understand where he's coming from right now, but he had some great points in there. Talking one about how, there's just not a lot to buy right now. There's not a lot of things that are valuable. And it's so hard to think that with the jobless claims that we have in this country and the way businesses have been impacted by this, that there's nothing to buy. There's nothing that's cheap. And one of the points he made, you've actually made this point a lot the last few weeks, is that these sellers, because it hasn't been that long since the peak of this thing, let's say February, they still remember what things were worth, and so they're still holding on to that valuation, and there's no way that could be reality anymore.
Right. Yeah, I think much of the current valuation, you have to get kicked in the shins a couple times in order to really understand the value. It's if you're a potential seller of an asset, I think they got to get kicked in the shins before they get realistic about what their assets are worth. Same thing with the holders of some of these assets in the stock market, right? So we're sort of in this like denial phase where we're hoping that what the impact is, but the reality is you can't run a pro forma on most businesses or assets right now. It'd be speculation on what it is, because you don't know what the impact is going to be.
Why do you think that that's held over like it is? Is it just because of the speed with which this happened, so it's just recent? Or is it because we were at such highs coming into this, we it's like we tasted first class and now we can't go back to flying coach? What is the reason that people are so hesitant to come down from these valuations?
I mean, I think it has to do with denial of reality. You look at I own assets too, and I'm not selling any of them, right? I'm going to hold them because I don't know what my impact is going to be, and I don't really care to sell either, right? So it's almost like the market is locked up, right? Because both buyers and sellers don't know what their assets are worth. And so how do you even value something? How do you value something right now?
Well, the other thing that he pointed out,
I don't think. Yeah, sorry, I interrupted you. I don't think that. I know that it's almost like all bad news is baked in. We shut down the world. Everybody knows we shut down the world. Nobody knows what that full impact is yet, and that hasn't been baked in. We know it's going to be bad. We don't know how bad. And so I think we have to know, I think we've fallen far enough to say, we know things are bad. We don't know how bad. And so if I own assets, well, I don't really want to sell them, because what if things come back really quickly? And if I'm buying assets, I'm thinking, well, I don't really want to pay top dollar, because what if this gets worse? And so we're almost in this weird like limbo phase, paralysis phase.
One of the things Zell said that made a lot of sense, and it's everything you just described is so much more complicated because of the government intervention. And I'm not saying
Right.
that was right or wrong, but it makes valuing things just a complete shot in the dark. And Sam points out that, and I'll just read what he said here. I've got the quote up. He said, bankruptcies are what you need to clear markets and what you need to end recessions and dips. The fact that there's a lot more distressed players today will help clear the market, but it also means that there aren't anywhere near as many opportunities as there were in the past. We're probably not going to see the bankruptcies that we rightfully should. And because of that, it's always interesting when a shirtless person just walks in the back of your room when we're on video chat.
Fortunately, it was my son and not my wife.
Yeah. We need a sign on the door or something just to let people know. But he does make the point that, and I think it's spot on, that there are certain ways that markets function, and anytime you get outside interference, and whether or not that's justified is a totally different conversation. Maybe it is, maybe it's not. But it makes valuing things so much harder to do. And that's why you're seeing guys like Zell, guys like Buffett just sitting on their hands right now. These are times when these are investors that would typically be buying up everything in sight, and nobody knows what to do. And it's it's frankly sort of scary because you see these markets up 400, 500 points today, and then it goes down, but how? It's great that it's up, I guess, but based on what? I don't think we know, and the government intervention just makes this so hard to figure out.
Yeah, it's totally unprecedented. I think I said this before. In the absence of fundamentals, technicals prevail, and the S&P is sitting right against the bottom side of its 200-day moving average, and I can't help but look at typical bear markets and say we just went through denial of where we were, bull trap, and we're expecting a return to normal. And until fear and capitulation sets in, I don't think we're going to see valuations of things that really make any sense.
No, I have no idea. And real estate wise, I think it's interesting. Just looking over this article that interviewed Zell, he was talking about his prediction for dramatic oversupply in the market. And I don't know if I've seen a lot of the building that he talks about in Phoenix, but spending time in Vegas, do you know, I have friends building homes in Vegas, and they're running a year or two behind schedule because they simply can't find framers right now. And anytime you hear someone say that, that's a little nerve-wracking. They're building so many condos, so many apartments, around Vegas. And I don't know if it's like this in other municipalities, but of course there's going to be oversupply issues. What do we think is going to happen? And this is in a market that was one of the hardest hit in the country with the financial crisis.
Right. Yeah, and I think it just takes time for that stuff to play out. I don't necessarily I don't buy into the you got to get in now or you're going to miss the greatest opportunity ever.
I don't think it is the greatest opportunity. That's the problem.
Well, I just mean as a phase, right? So you hear about that frequently. I don't just mean this situation here, but you got to get in. I remember in the run up to the housing crisis, the financial crisis, there was very much a prevailing thought that, oh, if we don't buy a house now, we're not going to be able to afford it in the future.
Mm-hmm.
That's a very scary thought when you think about who is the philosopher that said something is essentially something is moral to the extent that you can expect everybody else to do the same, and it's immoral if everybody else can't do the same. Anyway, I think the reason I bring that up is because if you take that same thought of I got to buy a house now or else I'm not going to be able to afford it, if that is the prevailing thought and everybody thinks that, then everybody is assuming that they're not going to be able to afford it in the future. They're all on the wrong side of the trade.
That wisdom, so what is the downside? Okay, if everybody else is doing something but you don't do it, well, okay. So there's not a lot of downside to that, but I guess I go back to that human nature comment I made earlier. We follow the herd, and we're so good at convincing ourselves or justifying things to ourselves because we want them to be true, and it's just not. And we get in really bad situations because of it.
Right.
Okay, so you don't buy a house, so you rent a house. Okay, but now at least I'm not overextended, so I'm prepared for the unknown. Funny thing is the people that probably stayed renting are probably the people living in the best homes right now.
Yeah.
Just I don't know. But as a retail investor, or excuse me, as a real estate investor, what are you seeing on the supply side right now? Is there too much supply?
I'm more of a value add investor. There is, well, before all this happened, that's what I mean. There's sort of this dislocation right now. Before all this happened, there was a shortage of real cash flow, right? And people are paying up for cash flow. during this phase here, there's not many deals that are getting done right now.
Yeah.
I mean, financing's difficult. The underwriting terms are difficult. Sellers haven't really, gotten realistic about what new normal looks like. I mean, we're looking at 33 million unemployed people now since this thing started. With the 3 million that they announced today,
Yeah.
33 million people. This is an enormous portion of our working population. And to our earlier discussion, when companies look at, because it's their ability to survive, when they look at that and they say, okay, maybe I can do these things more efficiently. Like, what percentage of those come back? It took us 11 years to create that many jobs this last time.
Yeah,
So
that's why the
say,
V-shaped recovery is such a fallacy, I think.
Yeah, I'm not a big believer in the V-shaped recovery either. I think that the V-shaped recovery is sort of starting to fall out of vogue. I'm just surprised the market hasn't fallen as that's fallen out of vogue. But you mentioned, like, as a real estate investor, like, what am I looking for? I'm looking for signs of life in the market, really, and I keep referring to it as the new market. How do we test this new market, this post-virus, to see, are things going to return to normal relatively quickly? In the most of the real estate I'm involved in is single tenant and multifamily, and so is that going to return to normal? On the single tenant side, are the cap rates going to be the same? Are the financing terms of buyers going to be the same? What's their required return? What's that underwriting going to look like? On the multifamily side, are rents going to continue to grow the way they were? Are occupancies going to continue to absorb some of this new supply, as you mentioned? All those things were working for us before this, but 33 million people unemployed. What does that mean? And then there's sort of this weird moral hazard, perverse incentive for companies to lay off their employees because their employees make more money on unemployment. It's better for them.
Yep. And
the companies get to keep their cheap PPP loans. These are the things we're going to argue about, I think, later. It's a strange world, and it's hard to even know where things are at right now.
Yeah, we're just stuck in purgatory, effectively. I've got CNBC on here, and I'm just looking at the next couple months on oil, and I'm thinking, well, I don't understand how we're not back in the same situation we were with oil that we were a couple weeks ago, because we haven't made more storage space for this. Nobody's on the road. You and I look at data for miles driven, and it's non-existent. So how is it going to be any better?
Well, and how much of that we were out of storage. Of course, I'm not an oil investor. Maybe somebody else knows it closer than I do, but just rationally thinking through it, we were out of storage, which is why the contracts last month expired worthless. The economy is starting to open up, but we were out of storage, and the tankers were still full and heading our way from overseas. Where are we going to put all this stuff? There's got to be something else going on underneath the surface, or there's just a lot of fools on the wrong side of that trade.
Yeah. Well, you're also seeing mortgage applications are starting to grow dramatically again.
Oh, are they? That's good news. I hadn't heard that.
Yeah, but where's the optimism coming from?
Oh, I don't know.
That's what I'm figuring out here. It's bizarre.
Well, maybe it could be positive if it's mortgage applications to refinance, at lower and lower rates, I suppose.
So I'm seeing headlines on Zillow right now, and actually we have a friend with Zillow that we need to ask about all this, because Zillow has the highest cash balance in their company history. Year over year, their traffic to their web and mobile is up 6%. So more people are looking for homes. More applications are happening for homes. The home listing sites are seeing great revenue. help me understand this.
I mean, I've been looking at buying a second home in a specific location for quite a long time, and I have been wondering, are prices starting to fall? Are foreclosures starting to pop up? Are there going to be opportunities for me to do that? And so, I'm probably adding to their 6% increase in traffic.
Yeah, I don't think valuations have fallen though, home wise. I think it's the same as the market.
Yeah, I mean, not much at least.
Yeah, I don't know if they have it all. So
But I remember just in '08. I mean, this feels. I think I said this before, but on a previous show. But this feels a lot like '07, when things are starting to not look good. Things are starting to slow down, and the discussions at the time, at least amongst my peers, were, "Oh no, this is going to be short lived. It's going to come right back."
we tell
Or,
ourselves the things we want to be true.
yes. Yeah, I think I'm scarred from that. Actually, my experience going through '08, and so I always think about things in terms of, okay, I think this about the world, but if I'm wrong, how am I going to hedge against that?
From a consumer behavior standpoint, I'm curious. So I saw earlier today Live Nation, who does a lot of the ticketing for concerts and sporting events, stuff like that, has said or released a little data point, and they said that 90% of people are keeping their tickets for rescheduled shows. I'm curious if civilization returns to normal, or if it changes. I've said on here, we have Wisconsin Badger football tickets, and I don't know what those games are going to be like. And I hate to say it, but if they cut the stadium size in half or a third or whatever, make you sit further away or reduce the fans, I don't want to go to those games. The fun of going to those games is not the game. I can watch the game on TV, but it's the environment you're in and things like that. And I think a lot of people probably feel that way. So I'm curious, one, if the government's going to allow us to get back to that, and then it's just going to be on the people to determine whether or not they're comfortable with it. But two, if the people are even comfortable with it, I don't know. I don't think anybody knows right now. And frankly, I think a lot of people are desperate to get back. I think there's certainly a sliver of the population that's going to continue to be very fearful, and they're probably never going to leave the house without a mask again. But I think a lot of us are just desperate to get things back to how they were, not just economically, but just in terms of the way we live. But is that even going to be possible?
Well, and I think those questions have to be answered across multiple venues. I think you're probably right. It was really interesting. I like to pretend like I'm friends with people like David Rosenberg on Twitter and respond to his posts. It's just kind of fun. But he was talking about 9/11 and the spending in air transportation, and it taking 7 years for it to come back.
Is that how long it took?
It took 7 years.
Holy cows!
Yeah, it took 7 years for it to come back after 9/11, and it was, I want to say, 2 years. No. It looks like a little bit longer for it to come back after, pretty close to that actually, for it to come back after '08. And I think it's a little bit different in this situation because 9/11, you looked at that situation, and that same thing could occur again, just like this virus, right? The virus spread could occur again on potentially an airplane, maybe, let's call it. So there's some risk there, but the difference in 9/11 was it could strike anybody, and it was certain death for anybody that it did strike. So low probability of occurrence, but it could be anybody. I think the difference with this virus, and specifically airlines, is if it were to break out again, there's a lot of us that just aren't really susceptible to any lasting damage from this thing.
Mm-hmm.
And so I think it might come back a little bit faster. But I think you're asking the right questions. I think these questions have to be asked sort of across industries, across businesses, across sectors in almost every case. Like I think about our own, car wash company that we run. I'm concerned about the economic impact that we may see, but from a virus perspective, there's just so little interaction with people
Mm-hmm.
that it's not the same as, say, restaurants, right? So a restaurant's going to be able to come back. Those are low margin business. You cut half the tables out of a restaurant, and can the business even survive? I don't know.
Not to mention, so let's say you have to have servers masked and gloved. Do you want to go to a nice restaurant and have somebody wearing a mask bring your food? It just doesn't feel right.
Yeah, that seems really creepy.
It does.
But I think it's those kind of things that we need to think through, and rather than just broadly, it's going to come back or it's not. There might be, like for a car wash company, there very well may be a V-shaped recovery, maybe, in that micro economy of car washing, right? For a restaurant, I don't think that's the case. For an airplane, maybe it comes back a little bit faster than a restaurant. I don't know, but I think those are the right questions.
So speaking of social distancing, where's the first RV trip?
I don't know. We're working on that plan still. Definitely cooler weather because we live in Phoenix in the middle of the desert. It's hot in summer, so we're looking across maps and looking for green swaths of land that we can go explore. And so probably somewhere either into Colorado or up into Utah, Idaho, maybe even as far as Montana, something like that. I would normally love to go to California. As you know, that's where I'm from, and got a lot of friends and family in there, and would love to come visit them. There's just a lot of weird things that I'm hearing out of California. Finding people having different tests as you cross the border.
Wait, what?
Yeah, I've been hearing this rumor about might have to get tested to cross the border into California. And only California is crazy enough to even talk about something like that. But stuff like that just makes me nervous.
Hey, speaking of crazy, so the state of New York had all these emergency healthcare workers from across the country come there to assist and to volunteer. For the folks that didn't volunteer, did you see that Governor Cuomo is proposing income tax for the guest workers that were there helping people treat COVID?
What?
Yeah.
That's crazy.
It's New York. It's.
Well, yeah. I mean, don't you have to pay taxes for every day that you work in New York, something like that?
Well, yeah. And so, we have a lot of friends that are baseball players, and they have to pay taxes in every different state that they play in. So you go to New York for a 4-game series, you got to pay 4 days of taxes there, and this is just stupid. But
It's
we're
crazy.
So the taxation is one thing, but going back to California and testing people at the border, we're not to get
By the way, we may be spreading rumors. I haven't even Googled this to see if this is fake news. Or
okay,
not.
well here's something that's not fake that I'm starting to wonder a lot about. In Kansas City, they are requiring you to register where and when you go to church. Well, okay, I understand you can stand behind the COVID thing and say that, but as a country, where are we going to start drawing the line between the Constitution and the quote-unquote public safety on this?
Yeah, that's a difficult question.
But these are the kinds of things that rip countries apart.
Yeah, the precedent that's been set here is could have some interesting implications in the future, for sure.
Yeah. Are we just going to get to the point where the government just shutting down businesses for this or that? It's just like, oh yeah, they shut us down. Like, when we start getting to that level of things, we're going to be in some seriously big trouble.
This is why people call us doomsdayers, though, Chris. Come on. Can we talk about something more positive?
I tried to bring it back to your RV.
Oh, yeah.
Yeah.
Oh, that's right. Yeah, we did, didn't we?
Yeah. This was a little bit more positive.
Hey, you know what's really positive? Bitcoin. Bitcoin's really positive.
Talking about Bitcoin, I know nothing about Bitcoin, nor will I ever know anything about Bitcoin.
You know, it's really interesting. So Bitcoin, it's just a means of exchange, right? And they supposedly have perfected the a digital hard money, which is a strange thing, right? Because it's pretty easy for me to copy a video or whatever it is and to create more of it. Well, theoretically, they can't create more of this. There's only going to be 21 million. But there's been a lot of interest from, hedge fund folks and financial folks into it lately. And this guy who operates under this Twitter pseudonym, Plan B is his pseudonym, created this stock to flow model, which measures the amount. It's used for like valuing commodities, gold, silver, copper, platinum, things of that sort. And the concept behind it is the more there is above ground, and compared to the production of it, the harder it is to manipulate the price, because there's broad ownership of it in theory. And if the price starts to creep up too much, well, owners can sell it. Producers, if they doubled their capacity of output, they couldn't really move the value much. Is sort of the concept behind it. So the higher the stock there is, and the lower the flow, the higher the value there is. And he's got this power law model that he created that matches gold and silver, and he matches it to Bitcoin. And so we're about to find out if the model's accurate. It shows like a 95%, might even be as high as 97% accuracy compared to its historic price. And in theory, it's supposed to shoot up. The first model said 55,000, but then it was analyzed by a whole bunch of other quants in the finance world, and it's supposed to shoot up to 288,000 because of the halving that's coming this month. So every 210,000 coins that are mined, and mining just means transactions verified, right? So that's what this does. It verifies this transaction maybe between you and I. Those miners are actually creating verifying that transaction, and then creating that a part of the blockchain that gets sent out to all the other miners. And so it's decentralized to all these people. And their reward for that mining is Bitcoin. They get some Bitcoin. And so there's Bitcoin awarded every 10 minutes for whoever solves these things. And there's a halving coming in May, and at each of the halvings, the power law function, because of the stock to flow, jumps 10x. And so the cost of mining Bitcoin is about to go from an average of around $5,600 to it's going to double to a little over $11,000, but then and it'll continue to rise from there. So anyway, it's this great experiment right now, and what's interesting about it is it's sort of an asymmetric risk, right? If you're gonna 10x your money, and it tends to overshoot actually historically, and then crash back down. So it'll overshoot by usually a factor of another 0, and then it'll collapse 80%. That's been its historic trend. And so in theory, if this guy's right, it'll probably shoot up way over $300,000, and then it'll collapse back down to somewhere around $50,000 or something like that. And so everybody's speculating in this thing.
I was about to say,
a
are you speculating or investing right now?
Oh, I'm 100% speculating. But it's definitely a speculation, but I've got a thesis behind it. I think with where the global economy is, as all of these countries struggle to keep up with even the U.S., right? They're having to print, even the Eurozone, they weren't able to tighten their monetary policy from 2008 really at all. Whereas, we were able to do several increases to our interest rate, and it just shows the strength of the dollar. If all these other countries have to inflate their way out of their problems, you may see a situation like Venezuela, where people are, instead of keeping their money in the Venezuelan currency slips my mind at the moment. But instead of keeping that currency, they immediately convert it to Bitcoin, and it preserves their spending power better than even their own currency, because their inflation rate's so high. So if those things happen, Bitcoin's a lot easier. Gold historically is a vote of no confidence in your country, and silver for that matter, in your country's monetary regime. But I think Bitcoin more modernly is also a vote of no confidence in your country's currency monetary regime. And I think as those things happen, that it'll become used more. But 100% is speculation.
Yeah, I think that's definitely the case. All right. I think we've beat that up pretty good this week.
Yeah, that was fun.
It was.
Good talk.
It was. When do you take delivery of the RV?
I don't know yet. So they've got a few things that they have to do to it. It's just call me sometime next week, and then I have to have it shipped.
Where's it being built at?
That's coming out of Indiana.
Yeah.
That's where they're all manufactured.
How many people sit sleep?
Oh, like 10.
It's
a bunkhouse travel trailer, and then of course they take every piece of furniture and it all turns into a bed, and they claim that it sleeps to gazillion people.
Yeah.
Actually, I think it's 8. I think it actually sleeps 8 technically.
But it'll easily get your entire family and 2 dogs in there.
Yeah. Well, I have 4 kids, so we got this bunkhouse model travel trailer with they've got queen size bunk beds.
Is it off road?
2 kids. No, it's just a normal one.
So you're going to keep the rooftop tent then as well?
Yes. In fact, what I'm planning on doing is having the rooftop tent on my truck, pulling the RV, and then we can kind of go find a place to park the RV, hang out for a little while, and then go on, further overnight expeditions from there. Maybe that's sort of what I plan on doing.
So you've got a bug out vehicle from your bug out vehicle.
Yes. It's all. I think I'm wired to explore. I just love that, and so you can kind of explore with the RV, then you can explore further with the bug out rig, and then maybe I need some backpacking. I don't know, and I'll just keep going even further.
Well, and from there, you get some dirt bikes or something like that.
There you go. Yeah, let's just throw a dirt bike in it.
That's not a bad stuff. I may join you in the rooftop tent category here very soon. I think they're very cool. I think for the price too, they're actually a really incredible value when you think of what you get for them.
When you compare them to a camper, they're incredible value. When you compare them to a tent, they're incredibly expensive.
Yeah, they are. But the problem with the rooftop tent though is you either need to get one of the little trailers to go with it, or you need to make sure that you have an off-road rig to put it on top of. So you're probably buying another vehicle or something else with it.
You gotta have something big enough.
Yeah.
But it's a fun exploration. I like being off the ground. It is sort of large and cumbersome a bit. But yeah, no, I've enjoyed it. It's been a fun adventure.
Yeah, I'm envious. I think I need to invest. All right, where can the folks find you on the interwebs?
Tim Barrett DM at Twitter. timsblogs.com.
Don't forget that second S.
Yeah, still working on that thing, so don't expect much, but it's starting to pontificate my thoughts, and then as I'm trying to understand this changing world so rapidly. This is the primary.
And Timothy Barrett on Instagram.
On Instagram, if you care to watch my off-road adventures, I suppose.
There you go. There you go. All right. I am Mr. Chris Book on Instagram, Chris Book on Twitter, and Chris Book on LinkedIn. Love to hear from you guys, and we'll check in with you guys soon.
Take care.